Hey guys, Jarrett White with White Ridge Mortgage here, back again with another video on how much do you need to save for a down payment to buy a home in Canada. Is it 5%? 10%? 20%? How much is it? Well, it depends. And I'm going to outline what I think is the best option at the end of the video. If you're someone that wants to buy a home in the near future and you're interested in educating yourself on all the different aspects of mortgages, all the tips and tricks, smash that subscribe button, hit that like button, and ring the bell to be notified. It really does mean a lot, and it helps support this channel so more people like you can find my content and learn as well. Without further ado, let's dive on in. Before you can understand how much you need to save for a down payment, you really need to know the difference between a conventional mortgage and an insured mortgage. In order to get a conventional mortgage in Canada, the minimum down payment requirement is 20%. An insured mortgage, on the other hand, is a bit different, and this is what's giving you the ability to put less than 20% down. However, there's definitely a few key factors you want to consider when getting an insured mortgage. Now, before I talk about the minimum down payment with insured mortgages, I want to actually outline what this insurance is, because once you understand what it is, you can make a better decision on if it's a route that you want to go. Now, a lot of people think that this mortgage default insurance is actually insurance for themselves. That is not true. You're the one paying for it, but the insurance is actually for the lender. Now, what this insurance does is it actually covers the lender in case there's a loss. So what this means is if you bought a $500,000 property and you have a $475,000 mortgage on it, and for some reason the market takes a turn, you're not making your mortgage payments, and the lender now needs to take that home back, well, even if they sell it at $450,000, which would be a loss, the insurance is going to cover that difference so that they break even. So keep in mind, when you're paying for this insurance, it is not for you, it is for the lender's benefit only. Now, if you're looking to get an insured mortgage, meaning putting less than 20% down to buy a home, there are a few guidelines that you need to abide by, and I'm going to go over them all quickly right now and then dive into them each individually so you can understand them better. Number one is the property must be under $1 million. Number two, the 5% down payment only applies to properties under $500,000, and then when you get between $500,000 and $1 million, you have to pay 10% on that remaining portion. Therefore, if you're buying a $600,000 home, you're spending $25,000 on that first $500,000 and then $10,000 on that remaining $100,000. Therefore, the minimum down payment on a $600,000 home would be $35,000. So it's not 5%, it's not 10%, it's a mix of both. Number three is the property has to be owner occupied, meaning you actually plan to move into it. It cannot be a rental property. And the fourth reason is you not only have to get approved by the lender, but you also have to get approved by the insured. And this is exactly why the insured mortgages can't exceed $1 million, and they also can't be used for rental properties because that won't get approved by the insurer. Now, the way the insurers have their pricing is it goes in increments of 5%. So with 5% down, your insurance cost is going to be 4% of your entire mortgage amount. Now, when you get to 10% down, that decreases to 3.2%, and then 15% down is 2.8%, and then 20% down, it is no longer required. So just to put that in perspective, if you were buying a $500,000 home with 5% down, meaning you would have a $475,000 mortgage, you're going to have a $19,000 insurance premium added on to that $475,000 mortgage. Therefore, your total mortgage amount would be $494,000 at the end of the day. So what really is better then? 5% down or 20% down? Well, it really depends on where you live and how much money you already have saved up. If you live in BC like I do, specifically in the Lower Mainland, one-bedroom condos are typically around $500,000, meaning you can actually get into the market with as little as 5% down, which is $25,000, opposed to having to save up a full $100,000 to make that 20% mark. Now, that's where it depends on the person. Yes, if you have a really strong income and you can save that amount up fast, great, save it. But in places like British Columbia, where the economy is like wildfire, especially when it comes to real estate, that's when you need to decide how long is it going to actually take me to save up this full 20%. Because the difference between 5% down and 20% down in this scenario is $75,000. If we're going to be realistic, based on an average salary of about $80,000 to $100,000, it's going to probably take about 2 to 3 years to save up that extra $75,000. Therefore, what you need to figure out is the appreciation on your property going to outpace the cost of that insurance? Now, based on a $500,000 home, if you were to take a conservative 2% annual appreciation, you will actually outpace that cost of insurance within the first 2 years, and then any time after that is just pure savings. You also got to factor in the cost that you may be paying for rent in the meantime while you're saving up. So in my professional opinion, as a mortgage broker who's worked with hundreds of families in BC getting them into homes, it is much more beneficial to buy with 5% down than 20% down if you do not have the 20% saved up. But if you do have 20% saved, you're gonna wanna put that full 20% down, because then you save the entire cost on mortgage default insurance. So there really is no right answer. It really depends on the person, and that's why you really wanna talk with a mortgage broker. So there you have it. By now, you should know everything there is to know about minimum down payments in Canada. And if you wanna discuss more, we're a mortgage company that helps hundreds of families each year in British Columbia, also in Ontario, Alberta, and Nova Scotia achieve their dreams of home ownership. We'd be more than happy to book a call with you. Visit our website with the link in the description. And once again, please hit that subscribe button, ring the bell to be notified, and like this video, and we'll catch you on the next one.